it's time for our special Newsmakers segment, and we have, of course, Anuj taking it away, along with Santosh Nair, editor of moneycontrol.com, and they're discussing a very interesting phenomena, this concept of stocks constantly hitting the ban in the futures and options market. So, Anuj, do explain this to us. Why is it happening? How do these limits apply, and what does it imply?
Oh, yes, Surabhi. In fact, I have Santosh also with me. Look, before we discuss this plate, let's first get the first plate going, which is the stocks which are right now in F&O ban. Now, what exactly is F&O ban? When you buy or sell a stock in F&O market, you buy or sell, of course, to play the leverage. You build a certain open interest. The number of shares that you buy or sell, that becomes your open interest. The shares which are in F&O ban right now are DLF, Fortis, GMR Infra, Indiabulls Real Estate, IFCI, India Cements, Infibeam, JP Associates, Oriental Bank. Let's see if we have that plate, actually. That's very important. Reliance Communications, Reliance Capital, and Ujjivan. Santosh, interesting, because this is the same set of stocks which has, hit F&O ban over the last 5 or 6 months. You've also done some number crunching here.
Yes, pretty much. If you look at these stocks, at least about close to a dozen of them are the same stocks over and over. You see them repeatedly getting into the ban period. Now, the rules say that when a futures hits 95% of the market-wide position limit. Now, market-wide position limit is 20% of the free float. So once 95% of that is hit, you can't take any fresh positions till it comes down to 80%. Now, this is what traders say that these operators are playing around. Once they push it up to 95, then they ensure that it doesn't fall below 80% anytime soon. That is how the game is played.
The issue here is, and for all of viewers as well, by the way, we are live on Facebook as well. Issue here is that if a stock is in F&O ban for a consistent period of time over 3 consecutive months, then the rule says it gets out of F&O. But a way has been designed to even avoid that as well. A case in point was Infibeam, Santosh.
Well, Anuj, the rules are slightly vague. So what the NSE rules, which is also the SEBI rule, says is that if a stock it goes into ban period consistently for a significant portion of a month, for 3 months, then, it has to be excluded. Now, the significant portion is very vague because sometimes out of 22 trading sessions, you have a stock being in a ban for about 16 or even 18. In some cases, almost the whole month, there's no trades in them. But you don't see them hitting it 3 months in a row.
Yes.
So 2 months, you will see them hitting about, let's say, 16 out of 22 or 18 out of 22. Third month, it will be down to
6 or 7.
Yeah, it will down to 6 or 7.
Yes.
So that way, the rules then are not applicable. So one of the things here probably would be to define the significant portion.
Oh, yes, that's something that needs to be plugged. Now, let's go back to the original plate. How is this game being played now via the option side? I've just taken 4 stocks. Infibeam, Indiabulls Real Estate, Reliance Communications, and Oriental Bank of Commerce. Infibeam has 77% futures, 23% options. Look at Indiabulls Real Estate, 63% is in futures, 37% in options, Reliance Communication, and Oriental Bank of Commerce as well. Now, here comes the interesting part. Let's look at Infibeam. The high open interest is at 1150 to 1400 calls. 1400 call. Yesterday's closing price was 1055. It gets even better. Look at Indiabulls Real Estate. Highest open interest at 215 call and then 120 put. 120 put for a stock which is at 206. 4 days to go for expiry. Who's buying this 120 put and who's selling this 120 put? Reliance Communications, even better. 32.5 call and 10 put when the stock is trading at 22 rupees. Oriental Bank of Commerce, 160 call and 95 put. Stocks trading at 140. Santosh, 95 put would be available at 5 paise. For Reliance Communication, 10 put would be available at 5 paise. And these are notional values, right? I mean, exactly. Logically, there should not be any trade here.
Right.
But they're available at 5 paise. Explain to us what happens here.
So, clearly, it is again the amount of money you have to block to buy those options. So, when you're buying far out of the money options, obviously, the premium paid is very low. And also, this is what traders say, that many of them are circular trades,
yes,
so to speak. So that's why you see this kind of, way of the market price kind of bids being put there. So when this happens, you don't have to fork out a very hefty amount by way of margin also, especially when you're buying the call options, the charge is very low. So for a very low cost, you can build up a huge position and then you can kind of take it into the ban period to about 95% of the market-wide position limit. So this is where the options part comes very handy.
Okay, just to explain that point that Santosh made, let's look at an example where it's not a stock, but I'm just giving you a basic example. There's a lot size of say 10,000 shares, price is 100 rupees. If you want to put margin for 10 lakh shares in futures, 10 lakh shares, you'll have to put up 10 lakh rupees. And that's, I'm assuming that you're only paying 10%. In certain cases, you have to pay 20%. But if you're buying at 10 lakh calls, again, these huge out-of-the-money calls, and you're paying only 5%. 5% is also because, 5% is the tick that you have. It can't be 1 paise or 2 paise. 5% is the minimum tick. In that case, you're paying 50,000. So by only paying 50,000, you are getting the same quantity that you would have otherwise paid, a margin of 10 lakh for. Now, keep in mind, that is for the option buyer. There's an option seller as well who has to pay that margin of 10 lakh rupees. But as Santosh pointed out, these are circular trades, so it's assured. These are market-making trades. You won't get this on screen. You have one buyer and one seller. They are arranged, and of course, positions are taken accordingly, because otherwise, those trades can't go. But the option seller is guaranteed that he won't also lose, right, Santosh?
Right, exactly. That's the whole thing. So even if there is any profit or loss, they get, adjusted off the screen.
Okay, so that's the basic research. Santosh, you've been writing a lot on this. Thanks a lot for taking time out and explaining this to us. I'll just quickly toss that to Mr. Tulsen as well. Mr. Tulsen, we've been talking about this. A lot of stocks hitting F&O ban. Has time come to look at this concept of 3 months and revising it? I mean, if stocks keep hitting F&O ban, just take them out of F&O.
See, Anuj, 2 or 3 things. Firstly, I think the free float, that 20% need to get increased to 40-50%. That is number one. Number two, you need to have this revision, or maybe remove those stocks which are even have gone maybe say 7 days in a month or in a series. In F&O bond, instead of calling it for the significant time. Number two. Number three, if you say take the call, in fact about 10 to 12 stocks always you will find them in the F&O ban. In fact, I would say that the dirty dozen maybe concept can apply to these stocks more appropriately than these stocks which have been referred for NPA number 3. Number 4, just let me add you one methodology here, how it is done in majority of these stocks. There is a huge financing which is happening. Now I won't name the stocks here, though I know the modalities and all that. Take for instance, if a stock is ruling at 100 rupees, what a financier is doing, that he is taking 100% security or margin, or sometimes it is 200% also. So suppose if he has lent the say 100 rupees by taking 200 rupees, double the quantity of shares, what he will do, he will buy the 50 put of 50 strike price, the equal quantity. So what will happen, suppose take for instance, sometimes we feel that no, the things cannot happen, things cannot fall in such a manner. Take the case of Videocon Industries. I am not saying that stock is into the F&O, but at one time that used to be in the F&O, and we used to see that kind of pattern happening. So what financier in that case is doing, that he is buying half the quantity of the amount having lent. So suppose if stocks fall from 100 to 20, so he is protected because he is holding double the quantity. So he has sold 50, he has bought the 50 put by paying a very nominal premium of 5 paise to 10 paise, and he gets protected. So in fact, majority of these stocks which are into F&O bans are more to do with the financing having done by the large financiers. I don't want to name whether it is by NBFC or it is by the private. Generally, it is all by the private financiers. Those who are having deep pockets, HNIs kind of things. So I think this is high time that SEBI should look into it and should curtail it, because let me tell you, the retail investors are losing heavily, because still there is a fancy amongst the traders that they love to trade into the F&O banned stocks, thinking that it will only go up. But that myth again is wrong. It can fall or it can go up in both way, as structured by the so-called financier or so-called player or so-called operator.
Oh yes, Mr. Tulsen, thanks a lot for that. Yes, so these are the list of stocks out of which many have consistently hit F&O ban, Santosh.
Yes.
So, Surabhi, back to you.
Anuj, fascinating stuff really there, and quite an eye-opener as well as to how this is sort of going on. Otherwise, we of course, we keep noticing this on a day-to-day basis, but really a lot of perspective there. In the meantime, by the way, the market struggle continues on the large cap side of things, still down 25 points, and a couple of stocks like ICICI Bank and ITC are seeing a little more sluggishness. Let's get the intraday charts up on this one. Both ITC and ICICI Bank losing some ground in the last 15-20 minutes. Ashwini, you want to come in on this? Specifically ITC, it's been weak right from the word go today.
See, it was holding on, even Reliance was holding on, but now even these stronger stocks are coming under a bit of pressure. So chances are that at some point we'll go through 9475 because Reliance and ITC have just started their correction and possibly have more downside to come.
Okay, all right. We'll take a quick break on that note, but we'll come back on the other side and get you a mood check across dealing rooms today. So stay right there, and also some BTST ideas coming up. And not just that, do stay on. We'll be taking up your Twitter queries live on the other side. So if you have any questions, tweet away, and our expert